Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Kevin Davitt, head of index options content at Nasdaq, to discuss performance of the Nasdaq-100 year-to-date and if September options expiration added to the volatility we've seen thus far. Kevin, it is great to see you as always. Welcome back to Trade Talks, and it's here. Fed Day is here. It's been the primary focus for a number of weeks now. We got the 75 basis point rate hike. Any thoughts ahead of Powell's presser coming up in just a few minutes here?
We did indeed, and thank you for having me back. We got that 75 basis point move. It was a unanimous vote, which some people track. In my opinion, the distinguishing bits are likely to be found in the updates to the dot plot, which we'll get at the bottom of the hour, and kind of the overall tone for the conference. So the terminal rates projection is now up to about 4.6% next year, which has been inching higher. In a more kind of qualitative sense, how hawkish does Powell come off in this press conference? Now, the visual we have here highlights NDX Nasdaq-100 index performance in 2022, and we have the dates of Fed meetings marked. So this year, the market has generally declined into Fed decisions and rallied afterward, with the exception being the early May meeting. At the moment, the market is pricing somewhere between 100 and 125 basis points in future 2022 hikes. The shift in rates this year has been incredible, and we have seen risk repriced across asset classes as a result.
And last week, we saw a lot of volatility in stocks. To what extent was September options expiration, which, by the way, was a quad witch, impact the volatility that we saw?
Right. That has been kind of the tone, or one of the key points throughout this year. It was a difficult week for the major U.S. equity indices, including the Nasdaq-100, and it was exacerbated by that CPI print. But like I said, this has been a trend throughout the year. So on average, during the third week of the month, the Nasdaq-100 has declined by about 2%. Now, on the flip side, the following week, so after your standard options expire, that's been a strong one, and the NASDAQ has rebounded by slightly more than 2% on average. So last Friday, we saw more than 6 million index options roll off the tape. Now, relative to the standard September expiration of a year ago, that's 13% higher. So what does that mean? September index options for 2022 were traded and held in greater numbers when compared to last year. And looking at individual equity options, the open interest was slightly lower year over year in that sleeve. Now, overall volume numbers are in line with what we saw last year. So average daily volumes right around 40 million, but that makeup is skewed more toward index options as opposed to individual stock options. And from my perspective, that's fairly typical when you have a market behaving the way it has this calendar year.
And to your point, Kevin, on Nasdaq 100 behavior, do you see any other comparative times in history?
I think you could argue that based on year-to-date performance and kind of macro volatility levels, there's arguably three comparable years, 2001 and 2, as well as 2008. Now, those are difficult comp years from a bull standpoint. The Nasdaq 100 was lower by about 27% through yesterday's close. The visual here reflects performance for the 3 years that I mentioned, as well as this year, and 2022 is highlighted in gold. Now, going back to 2001, that was following the dot-com bust and September 11th attacks. The Nasdaq 100 was down by about 40% at this point that year, but it regained some footing in Q4 and rebounded by about 10%, and there was a very similar path in 2002. Now, as many people likely know, 2008 was different, and late September was kind of just the beginning with the Lehman Brothers bankruptcy, and the Nasdaq 100 continued lower throughout 2008, so a very different path. Now, will we get a strong Q4 rally or more disappointment? I certainly wish I knew, but option volumes, as I mentioned, continues to focus on the indices as opposed to individual names, and the options are pricing considerable uncertainty, but not what I would deem as panic.
And Kevin, to wrap up here, any other notes on the Nasdaq 100 ecosystem investors should be aware of?
I I appreciate your asking that. So one important point is that quarterly options should be listed and available for trading on the NDX index option products very soon. So what we're talking about there is options that will expire on the last trading day of March, June, September, and December. Why is that important? Well, those options are used regularly in defined outcome ETPs and ETFs. So more expiries are associated with greater choice and defining those risk parameters. I would also reiterate one final thing that I made note of on my last visit. We now have months 1, 2, and 3 for VolQ futures and options, which means you could initiate spreads in that NDX forward vol market, which can be powerful, and it does typically reduce margin requirements significantly.
All right, Kevin, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.